our private markets perform a different function today than they did 10, 15 years ago. They perform a function that was largely performed by our public markets. Great deal of growth capital to take companies from small size, medium size, to a very large capitalization, all within our private markets. That is new. I think last year, depending on what metric you use, more capital, and certainly more growth capital, was raised in our private markets than our public markets. Probably means, if it's growth capital, better opportunities, or at least different opportunities, or opportunities that people want to seek. I guess we're delivering alpha. You want to find alpha? Mm-hmm. Private markets are a good place to look.
Oftentimes riskier as well, though.
No doubt. No doubt riskier. And that's, I'm glad we're having this debate. Because as I said to you before, I've never seen a company go from a private company to a public company without coming out a better company in terms of understanding its business and the rigor that the public market process puts on them. But we have to recognize that a lot of growth is happening in our private markets.
Okay, but that gets to the fundamental question, which is if you think that companies do better coming through the process of becoming public, what does that say about the transparency or perhaps lack of transparency in the private markets? And at a time, I'd add, that you have BlackRock, T. Rowe Price, and actually public investors, oftentimes now in vehicles that live in this private market space.
Well, you can't take a monolithic view of the private market space. There are lots of people operating in the private markets who are very good at understanding how companies perform and delivering performance. Are the rules not as rigorous as the public markets? Of course not. But we know lots of people who have operated in the private markets for decades and have delivered outsized returns by doing so, and put management teams and whatnot through the same kind of rigor that they have in the public markets.
What do you think of the valuations that have taken place in the private markets relative to the public markets? And I know you're going to, as I said, resist when it comes to speaking about specific companies, but I'm just going to let me mention something about WeWork as an example, and then you can maybe speak to it in a broader context, which is WeWork in its S1 revealed all sorts of things that raised all sorts of questions about the company. Dick Costolo, the former CEO of Twitter, said the degree of self-dealing in the S1 is so egregious and comes at a time when you've got regulators and politicians and folks across the country looking at Silicon Valley and wondering if there's an appropriate level of self-awareness. And the reason I mention that is because here's a company that in the private markets was worth $47 billion. By the way, there were public investors, if you will, to some degree, even in this, at potentially some of those types of valuations. And then as the process, which I think you might argue, maybe it's working as they've gone public, but clearly that valuation has been cut in half, if not more.
So let's just go back to that I'm not going to comment on a specific company, but let's just go back to what we were talking about, the debate. Price discovery in our public markets is different from price discovery in our private markets. Right? One of the things our public markets provide is not daily liquidity, but microsecond liquidity.
Right.
In private markets, its liquidity is a negotiation. Mm-hmm. And so the price discovery mechanism is completely different. It doesn't surprise me that you would have differing valuations over time in public and private markets for the same type of company.
But you've talked and you've hinted about wanting the SEC to come up with steps to effectively make it easier for public investors to be in the private markets. What would that look like, and what kind of transparency would be required?
Let's talk about that, because this is an issue. If the growth opportunities have shifted, not all the way, but to a substantial extent into our private markets, and ordinary investors don't have access to them, right, that's not good. Okay, now, the question is, what do we do about it? One of the things I like in our public markets is Main Street investors, they invest right alongside the institutions with the same deal, virtually the same drag. They're all in it together. Can we replicate that in our private markets? Now, it's very difficult to do that on an individual basis. It's hard to give individuals direct access to our private markets. So one of the questions is, can we have some kind of fund structure where we ensure that ordinary investors are getting the same deal as the institutional investors. It's a wonderful thing about our public markets. Ordinary people are right alongside the very sophisticated institutions.
But then the flip side of that is, as we mentioned earlier, oftentimes these private market investments are considerably riskier. And so when you talk about mom and pop out there, whether you want them in these riskier investments, I should tell you, by the way, this is from a Goldman Sachs report. Goldman Sachs says that less than a quarter of the companies that have gone public in 2019 will report positive net income this year, and that's the lowest level since the tech bubble. So what do you make of that?
Well, look, it's hard to draw conclusions from single stats, but I will say that I am concerned that our public markets are being used more for liquidity than for growth.
And therefore, you need to do what?
Well, we're having this debate, right? So if they're being used more for liquidity than for growth capital, and we want to make investing widely distributed, we have to look at how we can have access to our private markets. For a very long time, there's been and let's get back to where I started, which is why are people waiting so long to access capital from our public markets? Why are they waiting so long? Is it because there's just so much capital available in our private markets, or are we doing something in our public markets? Are we too short-term oriented? Are we too is there too much cost associated with going public? What is happening that people are waiting so long?
Well, isn't it that for reasons that, and maybe they're rational or maybe they're inexplicable, private market investors seem to have a much longer leash for the types of investments they're making? They may be more willing to give over 20 to 1 voting rights to their founders and things that historically in the public markets we would have thought as bad governance issues, but that a lot of these things are around governance. They're around things that, for some reason, in the private markets, investors seem to be just fine with, but in the public markets, there's a sort of very different view.
Yeah, and look, I think we also have to, we really have to be careful not to take a look at one segment of the private markets, say the tech segment, and then apply that across all of the private markets. Because I think if you look away from the tech segment, I can tell you that the people investing in the private markets away from the tech segment, they're pretty rigorous on their management teams. I mean, the kind of rigor that they apply to significant private market companies is in many ways equivalent to the kind of rigor that the public markets place on management teams.
You spoke about this idea that so many private companies seem to be using the public markets for liquidity. The less polite way of describing that might be that they're letting the public sort of hold the bag after the growth opportunity really existed. What do you make of this sort of trend towards direct listings versus the classic or more traditional IPO process right now?
Look, let me tell you what our job. Let's take a step back. Our job is. Somebody asked me the other day, what's your job? That it's fair, And if a direct listing is providing the same kind of fair information, fair access to the market as your more traditional underwritten IPO, who are we to judge whether one is better than the other as long as the investors have fair access to information?